Good morning. Welcome to Stock Market Today. It's Wednesday, November 13th, 2019, and I am your host, Dan Russo, the Chief Market Strategist at Chaikin Analytics. Find me on Twitter. I'm at DanRusso_CMT. Stock Market Today brought to you today and every day by Chaikin Analytics. Head over to chaikinanalytics.com/today. Sign up for a free email that gives you daily stock ideas for you to consider. Hits your inbox every trading day before the market opens. So U.S. equities finished higher overall yesterday, but off their best levels. Healthcare and materials led while REITs and energy lagged. Treasuries were stronger across the curve after returning from that Veterans Day holiday on Monday. The dollar was stronger versus the euro, but weaker on the yen cross. Gold was down 20 basis points, and WTI crude settled about 10 basis points lower. And as we get to the desk this morning, futures are down about 30 basis points to start the day. Asian markets were lower overnight, with Hong Kong falling nearly 2%. European markets are also weaker here in the early going this morning. Treasuries are stronger across the curve. The dollar is slightly weaker versus the yen and the euro. Gold up 70 basis points, and WTI crude is down 80 basis points. So for the S&P 500, we're churning near the highs is kind of how I like to call it. After breaking out here, we've got some sideways activity. Now, we did trade to another new high yesterday, but then closed back near the lower end of the range on the day. And as I said, futures are trading lower this morning. If we're thinking about key support levels, the key support level is around 2,900. That's the 200-day moving average. But in the near term, we want to watch the breakout level at our, call it 30.25 to 30.30. And then below that, 29.50. Those are the key near-term levels. And I would expect, obviously, the 200-day moving average to continue to move higher as the index does remain above that measure of long-term trend. The RSI remains in bullish ranges and is bumping up against overbought territory. And Chaikin money flow is bullish and working its way higher. So the indicators supporting the price action that we've seen here over the past couple of weeks, right? Notwithstanding a little bit of weakness in the futures here this morning, I think the process remains the same. Identify the strongest areas in the market, and then identify the best stocks within those areas of the market, and ideally buy them right, buy them when they're oversold and with bullish money flow. So what are we writing about in our note today? Our market in a minute. Quiet session as SPY churns near all-time highs. We hit on that. We're going to hear from Fed Chairman Powell today. He's going to address Congress today and tomorrow, give an update on the state of the economy. Obviously, always a closely watched event when the chairman of the Fed is speaking. Sentiment indicators signal more greed than fear. That's something we started to touch on last week and continues to be the case this week. Mid-cap value beginning to outperform. So we're really starting to see outperformance across market caps for value as opposed to growth. And futures, as we said, point to a lower open here today. Now, the power bars for the major indices, the Dow still stuck with a bearish power bar, 8 bearish or very bearish stocks for 3 bullish or very bullish stocks. The S&P 500 tacked on 20 basis points yesterday, but as we said, closed near the low of the day, 126 bulls to 96 bears. NASDAQ was a small outperformer, 33 bulls to 16 bears there, so better than 2-to-1 bulls to bears for the NASDAQ. Small caps were an underperformer on the day relative to the S&P 500, but still with a solidly bullish power bar at 696 to 311. Bonds rallied, sending yields lower. And according to the Chaikin Power Bar, small cap stocks and large cap stocks are bullish, but the major markets across the board are mixed. Let's take our stock of the day now. This is one that has been coming up a lot lately in my conversations and in the calls that I host with clients. Micron, ticker symbol MU, closed at 46.90. Nice outperformance yesterday, up nearly 1.4%. Micron has a very bullish rating due to very attractive financial metrics, very positive expert activity, and strong earnings performance. The technicals are somewhat dicey here as the stock has been chopping around of late, but we do have a very bullish stock when we roll up the 20 factors. 5 in each of these categories, and it's in a strong trend above our rising long-term trend line. And obviously, you've heard me talk about semiconductors quite a bit over the past few weeks. It is a strong industry group. So if we look at the structure of Micron here, we have a very bullish stock being met with outperformance. So the market and model are in agreement here. They, in gear. We're looking for very bullish stocks that are outperforming the market. We always talk about wanting to buy them right. Well, buying them right means getting them when they're oversold or close to oversold, and we are approaching that level here. Our overbought, oversold indicator from Micron rounding out of this overbought condition and heading towards oversold levels. And shaken money flow is perking back up, getting to be bullish again. So Micron looks compelling to me as a long idea. I think if you want to enter the trade now, I really can't argue with it. The weight of the evidence supports Micron. If you want to wait for this oversold indicator and potentially a pullback to support in the $44 to $45 level, I can't argue with that strategy either. Everybody has a different way of looking at the market and entering their trades. But either way, I think you have some solid support around $44 from a pricing standpoint. I think we're getting close to oversold conditions. Micron starting to look like a compelling name for an entry on the bullish side of the portfolio. Let's take a look at the sector tracker now. Movement of the major sectors over the last 5 days, encouraging to see technology at the top of the list, right? You've heard me say it before. Technology is over 20% of the S&P 500. So technology is outperforming. That's generally a bullish sign for the market. The second largest group from a weighting in the S&P 500, healthcare, and that's in the number 2 spot over the past 5 days, up about 1.5% over that time frame. And then we start to get into some of those cyclical areas of the market that we've been talking about, that rotation that's playing out. We're looking at the materials, the financials, and the industrials, rounding out those cyclical winners. Middle of the road, comms and staples. Discretionary, underperforming over the last 5 days. Our bond proxies continue to underperform, even though rates did come in a bit yesterday. Real estate and utilities really starting to exhibit a bit of a personality change too. If you look at their charts, starting to underperform the market after being strong leadership over the past few months. And then there's energy, just can't get it going to the upside. Energy back at the bottom of the list, down over 2% over the past 5 trading days. Now, our industry in focus today, mining services. Over the past 6 months, this group's been an underperformer, lagging the S&P 500 by a little over 1.5%. However, potential for a change afoot, with the power bar ratio being very strong. 6 bullish or very bullish stocks for 2 bearish or very bearish stocks. It ranks it in the middle of the road, roughly number 9 of 21 subsectors, and it's moved up 2 slots over the past week. So if you're kind of kicking around and looking for ideas in the mining services group, commercial metals, CMC, Reliance Steel, RS, and United Steel all have bullish Chaikin power gauge ratings. You'd want to drill down and see if they're also outperforming the market. Remember, we combine the power gauge with relative strength to really increase our odds of finding winning stocks. And you can see why that's important in a group like metals and mining, because we're not really there yet, right? The ETF rating for XME is neutral. Now, the trend is strong as it is above the long-term trend line, but still an underperformer. The group is still an underperformer relative to the broader market, but the intensity of that underperformance has been diminishing of late, and it's encouraging to see money flow starting to turn bullish. So, potential there. There's potential there for a change, but I think you really have to be selective with the stocks that you're looking at within this group for the time being. It's potentially rounding the corner here. You can see it's been in a steady downtrend and now beginning to stabilize, but not quite outperforming yet. Something to keep an eye on as we move forward. But my instinct is there's better areas of the market to focus on for bullish ideas. Don't necessarily feel compelled to go chasing anything in the metals and mining space at the moment. Let's take a look at what's trending now. Yesterday's S&P 500 movers and shakers are gainers and losers. DXC adds nearly 20% following their earnings announcement. Now, earnings and revenue were not that great, but it was management's commentary that got investors excited. They pushed that stock higher by nearly 20%. ROK up 10.5% following their earnings announcement. And I note that they did catch an upgrade here this morning. Tyson, TSN, nearly 7.5% to the good following their earnings announcement. Fortinet's a very bullish stock, and it was initiated with a buy rating at Goldman Sachs, and that was enough to send that stock higher by 4.2% on the day. And Autodesk, ADSK, was named a fresh pick at Baird, sent that stock higher by nearly 3.4%. Yesterday, loser side of the board, AAP, earnings send the stock lower by 7.5%. Viacom and CBS, these two are kind of interrelated as there is some M&A activity there. CBS reported earnings yesterday, took the stock lower by 3.6%. Viacom went along for the ride, down 3.8% on the day. Albemarle, They reported earnings on November 6th, and subsequent to that earnings announcement, they've caught 3 downgrades from sell-side research shops. Stock lower by 3.5% yesterday, and AAL, no real news there. It was, I will note, though, that it was given a sell rating at UBS here this morning based on some of the headlines that I have seen here today. So it is Wednesday. So we do sentiment on Wednesday, and sentiment's still more greedy than fearful is kind of the best way to talk about it. We monitor changes in sentiment to kind of gauge how aggressive we think investors should be with their bullish ideas, right? The trend is obviously the most important aspect, right? And the trend for the market is still higher, as you can see in the chart of the S&P 500. We've talked about it. We've broken out. We're near all-time highs, right? So the trend is higher. But with that breakout and with the move towards all-time highs, the CBOE equity put call ratio has gotten down to about that 0.6% level. Now, breaks below that level have tended to coincide with near-term topping activity in the market. So wouldn't be surprised to see a little bit of a pause here in the uptrend. And honestly, it wouldn't be all bad if all we got was a pause, maybe a pullback to some of those support levels to kind of reset sentiment a little bit. I will also note that the CNN Fear Greed Index, something that I monitor closely, is at an 88 out of 100. So that's in a position of extreme fear. And the reason I like these two metrics is because they actually incorporate trading activity rather than surveys where an organization goes out and asks people, hey, are you bullish? Are you bearish? How do you feel about the market? Right? People tend to lie in surveys, for lack of a better word, or talk about what they're feeling in the moment. But what people are actually doing with their money, I think, is a lot more informative. So when we look at actual trading activity, such as the put call ratio or such as the 7 factors that go into the CNN Fear Greed Index, I think what people are doing with their money is a better indicator of what their true sentiment is. And sentiment is frothy right now. There's no two ways about it. Does that necessarily mean you run out, sell everything you have? No, but maybe you temper your aggression when looking at bullish ideas, right? Just given how frothy sentiment has become. And it was really not that long ago that sentiment was overly bearish. And that was one of the key data points that we were pointing at, saying we were likely to break out of the consolidation to the top side. And that has largely played out. So we continue to monitor sentiment to gauge how aggressive we think investors should be within their portfolio. Now, one of the areas that we continue to like are the Qs. Right, on Wednesdays in my note, I also do a midweek update, and the Qs continue to look best for me from a major market perspective. Here's QQQ, the Invesco QQQ Trust. I like the S&P 500 broke out and continuing to move higher, but the Qs actually closed at a high yesterday. QQQ closing at 201.54 yesterday. You could see this consolidation here, right? For those of you who are classical chartists and into the patterns, right? This is what we have here would be known as an ascending triangle, right? A series of higher lows met with a flat top. And on that breakout, you can start to think about an upside objective for the Qs by taking the width of the pattern. So if we call the low down here around 180, the high at 195, that's a 15-point range. If you add 15 points to the 195 breakout level, you come up with an upside potential objective for the Qs of roughly $210. So that's pretty compelling. Now, the breakout and continuation higher is confirmed by momentum as the RSI has shifted into bullish ranges and has actually become overbought of late. So bullish momentum behind the trend that we're seeing following the breakout in Qs. So that's encouraging. And then finally, the Qs are outperforming. It's interesting to me that the Qs were actually underperforming pretty much since the May timeframe. And now they've broken that downtrend line relative to the S&P 500 and subsequently retested it and have now rebounded to move higher. So when we talk about a leading area of the market, the Qs are certainly an area that have to be in the conversation. And we see the potential for more upside there as the breakout was confirmed by number one, momentum, and number two, relative strength. And then finally, I said we looked at small cap value the other day. Let's take a look at mid cap value as an indication that value really is breaking out across market cap levels. Here's IJJ, iShares mid cap value breaking to new highs. consolidating a bit, but that breakout was confirmed by momentum as the RSI actually reached overbought levels, and similar to the Qs, broken downtrend line relative to the S&P 500 and continuing to hold above that breakout. So that growth to value shift continuing to play out. That's going to wrap it for today. Here's the website to sign up for the email. Thank you for spending some time with me this morning. I'll be back here tomorrow.